Then number 4 is the investment offered and sold with a reasonable expectation of profits to be derived from the efforts of others. And I think that this is where there is a lot also of contention off of this as well. So some people argue that altcoins do not meet the Howey test because they are not investments. They argue that altcoins are currencies and that they are not offered and sold with a reasonable expectation of profit. Hey guys, so in this video, I want to talk about Gary Gensler and the US SEC suing Coinbase, Binance, getting the hate of a lot of people from the cryptocurrency space. In everything that's going on, this becomes a bigger bullish case for Bitcoins. A lot of the altcoins are being touched, but Bitcoin stands tall as being the cryptocurrency that's left unscathed into all of this. It just shows of how much value Bitcoin has and that even Gary Gensler can't even touch it. What are the implications of this? Gary Gensler and the US SEC and going against the entire cryptocurrency sector in the US. First, in my opinion, it's going to stifle innovation in the crypto space. When exchanges are constantly under the threat of being sued, they're not going to be able to take any risks or try new things. This is going to slow down the development of new crypto products and crypto services. Gensler has been overstepping its authority. There are a lot of cryptocurrencies that are out there, but there are a lot that don't have any value, don't have any merit. Those things, we could take that to the wayside. But there are a lot of tokens and currencies and digital assets that are decentralized enough, that are built in a way that passes the Howey test, that they're not considered securities. For those who don't know what the Howey test is, it's a legal test that's used to determine whether or not an investment is a security. People always think that because there's an expectation of profit, that it's already a security. But think about it, people trade gold, people also buy trading cards, but trading cards are not a security. It's just that tokens and coins could be traded in exchanges and it feels like it's like the stock market, and it has a lot of features that you could actually compare it with how stocks are done, but it doesn't mean that it's a stock. It doesn't mean that it's a security. Here are the 4 factors of the Howey test. Number 1, is there an investment of money? Which, if you look at it, people have to invest money in it or swap their cash in order to be able to get that digital asset. Is there an expectation of profit to be derived from the investment? You could say that also for trading cards and gold and real estate from a perspective of Ethereum or ETH, that there's no one company that controls everything. It's decentralized enough. You have different validators or nodes that's taking care of the entire system. Then number 4 is the investment offered and sold with a reasonable expectation of profits to be derived from the efforts of others. And I think that this is where there is a lot also of contention off of this as well. So some people argue that altcoins do not meet the Howey test because they are not investments. They argue that altcoins are currencies and that they are not offered and sold with a reasonable expectation of profit to be derived from the efforts of others. Now, what's interesting about that is that exchanges are not operating legally. The exchanges that have been sued by SEC, they argue that they are providing a marketplace for buyers and sellers of altcoins, and they are not responsible for the actions of their customers. And Coinbase went into an IPO 2 years ago. Before they would get into an IPO, the SEC would need to sign off on it. They knew what the business of Coinbase was. They checked their books. The fact that they allowed Coinbase to make an IPO is contradictory to what they're actually doing right now. What this is all doing is basically stifling innovation. What the SEC is trying to say is that they're doing it to defend investors from fraud and abuse. And the agency has also argued it's not trying to stifle innovation, but it's simply trying to bring the industry into compliance, into law. People forget this, that there was an exchange owned by Bankman that collapsed a few months ago, but FTX was never sued. That baffles me so much. I think what's going to happen here is that since Coinbase is going to fight them via courts, this will drag on and this will be messy. But this just shows that there's just a lack of clarity in terms of cryptocurrencies in the US versus how it is in Europe versus how it is in Singapore and other countries. So it's interesting though that it's still way too early to see who's gonna win in this, because as this goes into the courts, it's not anymore gonna be the SEC's opinion, but it will be based on the decision of what the courts will have. And what's interesting about that is that the SEC's regulations are often seen being too restrictive for blockchain companies, and they're trying to do regulation and enforcement. They're not trying to work with the companies. They're not doing that. When you do that, you have to remember that crypto, blockchain, Web3 is something that's global. They're just gonna pull out from the US and go to other countries that are welcoming them. Talent, skill is just gonna move from the US to other countries, and it's not gonna make the US as competitive, because if you look at Europe right now, you look at the UAE, you look at Singapore, they have more established laws and regulations for this entire space. What this will also do is, aside from stifling innovation, it will just push retailers or people who transact into this space to move from centralized exchanges to decentralized exchanges. That this is just a larger use case for DeFi, that you won't be able to shut down crypto because there will be platforms, there will be projects that are fully decentralized. The only way you can shut it down, especially Bitcoin, is you need to shut down the internet. And as you've seen it also, there's more people now moving their funds from centralized exchanges to their wallets. And as it's in their wallets already, it's just gonna cost them to transact via DeFi. I think it will just move people towards DeFi because it gives people security and the ability to be able to hold their assets that no one can be able to shut down and take away from them. What's your take in all of this? Are you pro Gary Gensler or are you pro cryptocurrencies? Let me know your thoughts. Put it in the comment section below. If you have questions, I want to hear them. I'm going to try to make videos off of that. I have an investment 101 course. It's in the description below that will explain and give you details on stocks, crypto, bonds, NFTs, altcoins, and so much more. That's it for now. Marvin Gerbo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.